Hello everyone, this is Gracie here. In this video, we'll be discussing about throughput accounting from the subject performance management. So let us get into the meaning of throughput accounting. So throughput accounting is an approach to the production management which aims at maximizing sales, revenue, less material cost while also reducing inventory and operational expenses. So here, when I talk about throughput accounting, it is a principle-based and simplified management accounting approach that provides the managers with decision support information for enterprise profitability improvement. So throughput accounting is relatively new in management accounting. So this is a technique which is principle based and which is an approach which provides the manager to take decisions and give support information for the enterprise to earn profit. So when I talk about the word throughput, which means the amount of material or item passing through a system or process. So which is getting into a process and waiting for the output. So such output which will generate maximum sales revenue. So that the organization will earn profitability. So throughput accounting is where it is used to eradicate all the constraints. So to look into the constraints where the production is being slowed down or where the production has been disturbed. So in short run, all the factory costs are fixed except material cost. Yes. So when we talk about factory cost, all the factory costs are fixed except material cost. So when the material increases based on the material in units purchased, the cost also increases in material. So except material cost, all the costs are fixed in factory cost. So in just-in-time environment, all idle inventory is zero. So now what is just in time is also known as an inventory management method whereby labor, material, goods to be used in manufacturing are refilled or scheduled to arrive exactly when needed in manufacturing process. So when I speak about just in time, it is manufacturing of goods or acquiring of labor or raw materials or goods to be produced which will be manufactured when it is required by the customers. So there will be no idle inventories. So when there are idle inventory in the organization, which will lead to zero profitability, zero which will it is where an idle inventory is a bad thing and an idle inventory level is a zero level, so which doesn't bring any profit to the organization. So products should not be made unless a customer has ordered them. So profitability is determined how quick the goods can be produced to satisfy customers' order. So what throughput accounting explains here is, so there is need to follow just in time environment where the goods should be manufactured when there is need for that product, and to be where the materials or the labors should be used or refilled based on the time exactly when it is supposed to be manufactured, instead of buying the inventories or buying the materials and keeping in stock which are idle, so which will bring profitability a zero profitability, and there is no any ways of maximizing profit. So always the products are supposed to be manufactured when the customer orders them. So when the customer's order is given and then manufacturing a product, there will be easy flow of goods and exact goods will be produced on the given time with the machineries or equipments available. So profitability is determined by the rate at which money comes in, and a just-in-time environment. This depends on how quickly goods can be produced to satisfy customer orders. So every organization should keep in mind. So profitability is determined how quick the goods can be produced to satisfy the customer's order. So these are the three concepts of concepts of throughput accounting. So as throughput accounting aims at increasing the sales revenue, when increase its sales revenue is when it leads to decrement in the material cost, reducing inventory and operational expenses. So it should make, as it knows that all the factory costs are fixed except material cost. It should use the just-in-time environment, where it should make sure that no idle inventories are kept idle. So where idle inventories will lead to zero profitability. So profitability, how is it determined, is based on the customer satisfaction, based on the orders, based on the production what you make on, based on the orders what you make based on the needs of the customers based on the customers requirement. So profit is solely dependent on the customer's requirement. So the major cost for learning throughput accounting is bottleneck of throughput accounting. So the example of throughput accounting is not having enough time to produce a product using the machine in the factory. Then we have constraint, a limiting factor, that is time available. So every organization cannot produce the product at the given time. It can be due to the machinery, as it consumes time, or it can be due to the labor labor issues, where the machinery or where the product cannot be produced at the specific time. So there are various constraints which acts as a limiting factor for a product to be produced. So the bottleneck in the process is the machine, where there is no enough time to do all the work. So if there is more than one bottleneck, then the one we are worried about is the biggest one. So when I speak about the bottleneck, it is the constraint, or it is the conjunction where gives a stoppage for a product to be produced in a better or to be produced at the required quantity. So the organization should get into and look into what is the constraint and solve the constraint. So that is known as throughput accounting. So we will be learning how to solve it. So this is an example. So as this example states that throughput accounting, which gets into the problem, checks the problem and makes sure that the constraints are solved in the production operation. So here the constraint based on this example is time and machinery. So the machinery is not supporting for the product to be produced in that particular time. So the limiting factor is time. So how can you manage this? So the next topic is theory of constraints. So these are the steps which is used to manage the constraints. Constraints is the uh, why the theory of constraints is implemented is, so as we know, throughput is a technique which is used in factories to ensure that when there is something limiting production, that we prioritize the products that are going to make greatest contribution. So we make sure that the project which gives us more profit, so the project or the production which gives us good return, we start producing that. So when we are, as it gives us greatest contribution, we make sure that we produce that and make profit out of it. But when during the production process we find that there are constraints or limiting factors, it is nothing but there is a disadvantage while producing. So what are the disadvantage, or what are the constraints or limiting factors in the production should be prioritized, that is should be looked into and solved immediately. So if there are one constraint, that is if there is only one constraint, like as we looked into the example, like if there is the constraint is only time, then fine, okay, we can manage the time and go on with the production process. But if the constraint is more, then there is a worry in the production process, which will lead to a biggest loss. So if there is more than one bottleneck, so that is if there are more than one constraint which has been involved, so which makes the production congested, then the one we are worried about is the biggest one. So in order to avoid all this, that we will try the theory of constraints. So how to avoid or how to tackle the constraints? So the first step is identify the bottleneck resources. So when we identify the bottleneck resources, we look into the production. That is, we get through the production sector, and with proper inspection and proper check, we find out what is the bottleneck resources. Only when we learn about the production and look into the study the problem, we will know what is the issue. So the bottleneck. So as the example, the time factor was the time as well as the machine. So due to the machine, the goods were not produced within the time. So when the goods are not produced within the time, it will not be delivered to the customers. So now, as the throughput accounting suggests, just-in-time inventory. So now, instead of rushing up producing all the goods, it is better to produce the goods which has been ordered by the customers. That is what throughput accounting suggests, to use just-in-time process. But here, the constraint, we have already implemented the production. So when we have implemented the production, and if we are having a bottleneck issue, so bottleneck resources, so at that time we need to identify what is the bottleneck issue. So it can be machinery, or it can be a time. So when the machine is not helping out to produce the product, might be it can be an outdated machine, or the machinery has lot of repairs to be done. So this issues to be identified, so which delays in the production process. So the next, after identification of the bottleneck resources, the next step will be decide how to exploit the constraint in order to maximize throughput. So we will decide how are we going to exploit the issue. So how are we going to solve this problem in order to have a good production process which will generate a good output to us. So we will make decisions on it. So we'll have different alternatives, so that alternatives will work out in your step 3. So as the alternatives are decided in step 2, to maximize throughput, that is to maximize a good output by proper inspection and replacing the constraint, that is exploiting the constraints, we work on step 3, where the subordinate and synchronize everything else to the decisions made in step 2. So we will work out. So it might be the solution is the machine is not helping out to produce the product, so the machine is not supporting. So it can be an old machine, so the machine has a lot of repairs to be done. So the management can decide whether to replace the machine, or to buy the machine, or if the machine is proper, due to a lot of issues like there's no proper electricity facilities provided, or there are few labors where we as there are unskilled labors, or the labors are not trained well. So it can be due to the labors, they don't know to operate the machine well, or negligence of labors can also cause the issue. So after studying the bottleneck resources, everything related to the production process, what are the constraints will be identified. Then decision out of it will be made. So in the third step, they will start implementing the alternatives what they have decided. It can be giving training to the laborers. Next, it can be replacing the machinery to a new machinery, or repairing the machinery so that it will work without any disturbance. Next is, instead of producing the product with different alternatives calculated, the management can decide to buy the product from the other supplier and distribute it to the customers. So there are many alternatives where which will be implemented. So in the second step, they will decide the different alternatives which can exploit the constraint, and they will start implementing in the step 3, where they synchronize everything and they will work on it. Then step 4, they will evaluate the performance of the constraint. Is the constraint being exploited totally, or the work is going on? Then the step 5, if the constraints has shifted. So apart from this, when I have, as I've discussed, 3 constraints, so one constraint is identified. So among these 3, if one is identified, that is you found out that the machinery is not proper, you have replaced it, okay, fine, everything is over, so you have evaluated. And when you come to the 5th step, you find that there is still issue in the production process, where the goods cannot be produced within the time. So you will check again, you will go back again to the step 1 to find out what is the bottleneck issue. So after finding it, you will find that there are laborers who are not trained properly to manage the time and handle the machinery. So again, you identified, and you will decide a constraint, and you will make sure that a training is given to the employees and you work on it. So throughput accounting is nothing but a technique which is used to get into the process and look what is the problem which is delaying or which is increasing the cost of production, and which is what is the cost for reduction in the sales revenue, and give a conclusion, give a suggestion to it, to the managers to make better decisions. So how can we increasing this throughput, that is to the this overall inspection of production department or section is, the overall aim of the theory of constraint is to maximize throughput. So how is it? It can be increasing working hours, it can be by increasing production hours, carrying out routine of machine maintenance. So as your throughput accounting is basically for looking into the production performance, production sector performance, routine check on machine working performance or maintenance of the machine should be done, because it is the main purpose, main object which is used for manufacturing a product. So any negligence in maintaining the machine will lead to the stoppage of production sector. So increasing the working hours, which will make sure that within the specified time the customers orders can be satisfied. Increasing production hours as well as working hours. Then proper machine maintenance. Then slow down. So now for example, you know that you can't produce so many products within the within the required time, so it is better to slow down. So if the customers are asking for 50 orders, so you have decided to manufacture 100 orders, where the customers are asking on for 50 orders, for some 50 orders to be delivered. So because you have bought lot of raw materials, you will make sure that let all the raw materials be used and produce a bulk and keep it ready for the next customer. So instead of making the product, manufacturing the product immediately with a lot of burden on the employees as well as overtime work, it is better to slow down the work, where to produce only the required orders which is wanted by the customers, and then produce the remaining products which is required for the customer in the future days. So slow down will work out in increasing the throughput, that is to avoid the constraints. So this slow down work will actually make the work easier, where you will satisfy a set of customers and you will concentrate in the remaining work in the upcoming days. So instead of burdening the laborers as well as using the machine or at excess units working hours, electricity units, or it can be working hours of laborers, instead of burdening the machine as well as the laborers, it is better to slow down and satisfy customers immediate needs, and then while slowing down the process, the requirements can be satisfied based on the customers needs. Next, we will fix the problem. So when just to increase the throughput, fixing problem to find out what, as we learned in the constraint, to identify the problem. So it is better to fix what is the problem first. So by increasing working hours and increasing production hours, if the machinery is not proper, is not right. So you should make sure that whether the machinery is having a fault or whether the employees are having fault. So both should be checked and to be replaced. So if it is laborers, then training facilities can be given. If it is machinery, proper repairs and maintenance can be done. So next, when we come to speed up. So once you have solved the problem, you can speed up the old process back up again until there is a problem somewhere else. So you know the problem and you have followed the theory of constraint, then you can speed up your production. So there are various alternatives where you can use in order to increase your throughput accounting process. So when I speak about throughput accounting, it is overall maintenance or the expenses which is incurred to make sure that the organization earns maximum sales revenue. So what is the throughput expenses which has been incurred in order to manage all these production constraints? So in the throughput formula can be sales revenue minus material cost. So the cost which is spent in the production sector, it can be material cost or all the factory costs which is incurred. So throughput is equal to sales revenue minus material cost. So the next is what we are going to learn is about environmental accounting. So environmental accounting. So before getting into the next topic, let me discuss what is throughput accounting ratio. So throughput accounting ratio, as we learned, throughput formula is equal to sales minus material cost. So throughput accounting ratio is equal to throughput per unit of bottleneck resources divided by factory cost per unit of bottleneck resources. So to find out factory cost per unit of bottleneck resources, total factory cost divided by total units of bottleneck resources, that is the constraints which has been restricted in the production. So to find out throughput per unit of bottleneck resources, the formula will be sales minus material cost. So now let us first find out the throughput. Only then we can use the throughput accounting ratio. Then we will find out the factory cost per unit of bottleneck resources. So we will find out both throughput as factory cost per unit of bottleneck, and then we can find out what is the ratio. So by getting into an example, we will learn how to find out throughput accounting ratio, and throughput accounting ratio will be explained accordingly. So for example, suppose a factory manufactures a single product. Each unit of a product takes 2 hours to make on machine X, and output capacity is restricted by the available time on machine, which is restricted to 500 hours per week. The product has a material cost of rupees 20 per unit and sells for rupees 160 per unit. So total operating costs are rupees 30,000 per week. So now let us calculate. So as this is the solution, throughput per machine X hours. So what is the throughput per machine? So we are going to find out what is the throughput using the formula. So the throughput formula is sales minus material cost. So sales minus material cost. So what is the sales in the question? So the sales which is given in the question is a factory manufactures a single product. Each unit of product takes 2 hours to make machine X. So each product will spend 2 hours, and the output capacity is restricted. So the output capacity is restricted by the available time. So the time has been restricted here, which is restricted to 500 hours per week. So only 500 hours should be worked for 1 week. So the restriction is given here, which is the bottleneck issue. The product has a material cost of rupees 20 per unit and sales of 160 per unit. So to calculate throughput, we have the selling price as well as the material cost. So we will throughput per machine X hours is equal to selling price, which is 160 as per the question, which is rupees 160 per unit, and minus material cost, which is rupees 20. We will divide with the number of hours, 2 hours, to find out for 1 hour what is the cost. So 160 minus 20 divided by the number of hours which is working, so rupees 70 for machine X hours. So for 1 hour it is rupees 70. So after we find out throughput, we are going to find out factory cost per machine X hours. So what is the formula for it is total factory cost divided by total units of bottleneck resources. So total factory cost is nothing but the operating cost which is incurred. So which is rupees 30,000. So factory cost per machine X hours is equal to 30,000, and according to the formula, divided by, that is total factory cost or operating expenses divided by total units of bottleneck resources. So what is the issue, or what is the bottleneck here is the available time, which is restricted to 500 hours per week. So total factory expenses or operating expenses, which is 30,000, divided by the bottleneck issue, which is restricted to 500 hours, will give you rupees 60 factory cost for machine X for 1 per hour. So rupees 70 is the throughput and rupees 60 is the factory cost per hour. So throughput accounting ratio formula is throughput per unit of bottleneck resources divided by factory cost per unit of bottleneck resources. So we have found out the throughput amount as well as the factory cost per unit bottleneck resources amount. So we will implement the throughput accounting ratio. So which is 70 throughput per machine X hours and divided by factory cost per machine X hours of the bottleneck issues. 70 divided by 60, which will give us 1.17. So throughput accounting ratio is 1.17. So now let us get into what is the exact explanation for throughput ratio. The throughput accounting ratio is the ratio of the throughput per unit of the bottleneck resources to the factory cost per unit of bottleneck resources. This ratio should be as high as possible and certainly more than 1. So this ratio, this throughput accounting ratio should be more than 1. So in this example, interpreting the throughput accounting ratio, the total throughput should exceed total factory cost, otherwise the organization will make a loss. So as in this problem, the throughput accounting ratio is more than 1. That means that the organization, that is the throughput ratio that is much higher than 1, is barely profitable. So whenever the throughput accounting is more than 1, means that the organization will earn profit and it is a profitable position. So the aim should be to achieve as high a throughput accounting ratio as possible. So as it is high, the throughput accounting ratio is high, the profitability will raise accordingly. So please remember, throughput accounting ratio should always exceed more than 1, which is nothing but the total factory cost. Total throughput should exceed the total factory cost. So throughput accounting ratio can also be used to access the relative earning capabilities of different products. Products can be ranked in order of priority for manufacture and sale in order of their throughput accounting ratio. So higher throughput accounting ratio should be given priority over lower throughput accounting ratios. So it can also be used by ranking the product. So you can look into the ranking position, which product will give more profitability. Based on the ranks, the goods can be manufactured and the throughput calculations can be done. So uh, as the number of hours are restricted for certain products, if there is restriction, as we looked into this problem, when such restriction occurs, by using this throughput accounting ratio formula, the management can decide whether that restriction or that constraint which has occurred, will it give profitability to the organization. So the next topic what we are going to discuss is environmental accounting. So the term environmental accounting is the identification, measurement and allocation of environmental cost. The integration of these environmental costs into business decisions and subsequent communication of the information to a company's stakeholders. Identification includes a broad examination of the impact of corporate product, services and activities on all corporate stakeholders. So when I speak about stakeholders here, it is nothing but the organization's stakeholders includes debenture holders, shareholders, managers, board of directors, customers, suppliers, regulators, policy makers, employees, consumers, and community and environmental group. So all the stakeholders represent the organization. So the when we discuss about the environmental accounting, it is nothing but the identification and measurement and allocation of environmental cost. So what is environmental cost is the cost that comes to the mind of most of people immediately is are those relating which are dealing with the wastage or which is creating an harmful to the environment, where it can be issues which is related to water, air, soil or pollutions. So every organization manufacture using different raw materials, but the industries which are into usage of raw materials from the environment should make sure that it is being effectively used without much wastage in it. So the production sector should produce or manage the raw materials efficiently, because each raw material are from the environment section, so we should make sure that there is no harm caused to the environment. It can be even in managing a paper in the organization. So usage of recycled paper will always be useful. So wastage of paper is also leading to environmental costs, environmental costs. So papers can be reused and used in the organization. Then transportation costs, consideration of alternative ways of delivering goods would perhaps reduce cost and reduce the impact on the environment. Yes, so as there is transportation cost, there is a chance for you to reduce your overall cost transportation expenses by other means where you can think over, so that it will also reduce the traffic which is created, as well as the pollution which is created from the vehicles. So environmental accounting is nothing but the different ways or different strategies what we use in order to protect the environment. So and the cost related to the environment will be booked under environmental accounting. So that is why it is identification, measurement, and allocation of environmental costs into business decisions. And these information are subsequently distributed to the company's stakeholder to identify that this environmental activities are carried out by the company. So next, water and in every organization they use raw materials of water as well as electricity. It is nothing but energy consumption is done. So it should make sure that there is no wastage or inefficiency usage of these facilities which has been provided. So now, objectives of environmental accounting. So the first objective is to help make decisions that will reduce or eliminate their environmental cost. So an organization should always make sure that they don't create any harmfulness to the environment. They are the possible ways to reduce wastage to the environment, as well as to or eliminate their environmental cost. So to better track environmental costs that may have been previously overlooked. So where it helps to measure the organization and environmental performances. It can be how well the organization is involving itself relating to environmental issues, and what is their corporate social responsibilities which has been undertaken. How are they managing their environmental aspects in the organization? For example, not using plastics in their organization or recycling items are some of the environmental factors where an organization can feel proud of that they are into environmental safeguarding the environment. So the expenses which is related towards the environmental safeguarding the environment will come under environmental accounting. So to better track environmental costs that may have been previously overlooked, so a track of it to be maintained. So in order to maintain that, environmental accounting is used. So to better understand the environmental cost and the performance of process and products for more accurate costing and pricing of products. Yes. So how can it be helpful in pricing of products is when you look into certain advertisements where it shows that whenever you buy a product, it will lead to which will help which a certain percentage of amount will lead to plant trees or to educate a student. So this environmental issues also are used. Environmental factors are also used by the organizations for the product pricing activity. So we need to better understand the environmental cost and performance of the process and products for more accurate costing and pricing of a product. So collecting money from the customers through product and giving to the needy is can also help us to maintain the environmental accounting, and as well as satisfy the objectives under the corporate social responsibilities. Then to broaden and improve the investment analysis and appraisal process to include potential environmental impact. So when a company is branded, or when the company is good in the image of customers, has created a good image in among the uh, customers, or can create a good image among customers by being very environmental friendly, that is rendering good services as well as protecting the environment, will impress the customers to buy the product. So as humanity exists everywhere, so helping the nature as well as helping the society will create a good image to the company. So showing up all these environmental cost and activities which is performed will also help to increase the stakeholders of the company as well as the share of the company. So that is also one of the objective to have environmental accounting. Then to support the development and operation of an overall environment management system. So it helps as these activities to keep a track of environmental costs, which is and to fix the price of the product, to improve, to broaden and improve investment analysis by starting up different environmental projects. So this acts as a uh, all these environmental accounting acts as a support for the development and overall operation of environmental management system. So it is a must for organization to have an environmental accounting. So environmental accounting cannot be measured, or input on environmental accounting is not available as the cost. So it is the benefit which is provided to the society. So it will not easily be available as a cost, and the benefits relevant to the environment are not easily measurable. So many businesses and government organizations, even large and well managed ones, don't adequately track the use of energy and material or the cost of inefficient material use, waste management, and related issues. So this can be a disadvantages. So not all organization will make sure that how much what is their inefficiency in wastage made for that particular year from their production, how this wastage can be recovered. This will to keep a track of it, as a separate department should be set up. So it is not always it cannot always be performed by the organization or business sectors to keep a track of the inefficiency or material wastage in the management and related issues. So many organizations therefore significantly underestimate the cost of poor environment performance to their organizations. So there are organizations which are solely into profit motive. So where they are environmental protecting the environment, or they will have poor environmental involvement or performance. So when they are profit motive, there will be no environmental accounting maintained by the organizations. So as to conclude, environmental accounting cannot work independently. It should be integrated with financial accounting, which is not easy. So environmental accounting is similar as a part of financial accounting, as financial accounting and management accounting, cost accounting are into how to reduce cost. But when we talk about environmental accounting, it is to keep track of the expenses which is spent for the betterment of the environment. So it is a totally different part of accounting, but but it can be integrated with financial accounting. So it can be under financial accounting, that is how to record all the expenses. So thank you everyone, this is the end of the video.